All right. Welcome everybody to the Ultimate Advisors Resource Podcast. I've got my friend Sheehan here today of Profectus Wealth, and we're talking about an interesting topic today. Leveraging insurance contracts to invest in various real estate funds, real estate investments. It could be multiple things. And I wanted to bring Sheehan on specifically, well, for two reasons, really. I think Sheehan and I have a somewhat similar history in that our dads were both in the business, and actually his dad worked at the same agency I started at, so it's kind of an interesting history. And I think you've done a great job growing your business over the years, and I thought it'd be
Your check's in the mail, my friend.
well, I thought it'd be great to hear from you about this and kind of go through it. But I guess I'm Jordan Pence. I didn't do my intro. Jordan Pence, we're Advisors Resource. We help you grow your life and annuity business. So, anyways, let's go back in time a little bit and let's talk about how you got in the business. What what that sort of journey was like for you.
Man, that's first of all, appreciate you guys having me.
Thanks for coming, Sheehan.
Like I said, Jordan, you're a guy I love working with, and your firm. It's had a lot of good history here, and it's been a great time. So appreciate you having me. Wanted to get that out of the way, but
thanks. I like working with you too, Sheehan.
I appreciate that, man. I know sometimes I'm not the easiest, I try, but yeah, no, my journey in the business, it's been interesting, man. I actually literally grew up in the business. My mom and dad had me in college when they're in the University of Houston, right? So I wasn't exactly planned, as they say, right? So that was not easy for them. And so when my dad graduated from college, his first job out of school was in insurance.
Wow.
Yeah, he worked for Phoenix Financial. I don't know. Do you remember them at all?
Well, I know of them. I wasn't probably in the business when they were actually around.
I remember growing up, and he would take me to like the office, and I would see like the logos everywhere. You know how you work insurance, you get like a bunch of free stuff constantly. Yep. Our house was like fluttered with like Phoenix Financial marks, Phoenix Financial plates, Phoenix Financial like pullovers, this and that. I think there's literally a picture of me as a baby with like a 2-year-old. I'm wearing like a Phoenix Financial jacket. So
that's
time,
so funny.
like, they didn't have a lot of money, right? So I get it.
Oh yeah, why not?
That type of stuff. So no, man, I saw my dad from the ground level, just like, going on calls, going on meetings, talking to people like on Saturdays, Sundays, and that was the norm for me. You know what I mean? My dad didn't work a regular 9 to 5.
Right.
He wasn't, waking up at 7 o'clock. There'd be times I remember my dad be sleeping into like noon. I'm like, it's Tuesday. Like, what the heck is he doing here? And then, because he was out till like 10 o'clock or 11 o'clock the night before, entertaining clients or talking to somebody,
trying to prospect in, doing whatever.
So I learned quick. I was like, hey, if you want to be in this business, you got to be really comfortable being uncomfortable.
Yep.
Because that's just what it is. It's, you got to meet, you're on, your client's timeline, you're on your timeline. There's days you might have to meet on a Saturday. You might meet on a Sunday. You might have to meet on a holiday. It is what it is. So you got to be flexible with that. And there's good and bad with both, right? You get freedom, kind of like do what you want. You're the boss. You can do whatever. At the same time, it's like, hey, if you got to meet someone, you got to meet someone. Because if you don't, you're not going to get paid.
That's just what it is. Yeah, that's exactly right. And you're not really doing your job. I mean, your job is to speak to the people, talk to the people, see the people. And you know what's funny about you saying that? Because I remember, right out of college, I started at the same agency that we already mentioned that your dad was at. Out of all the old guys that were around, your dad was the only one that was like out of the office and rarely there. And I know it's because he was out on appointments.
Let me tell you something. My dad, and I'm glad you mentioned that. And yes, I know you have experience with my father too. Like, he had more energy than a 21-year-old. Right? Like, and he acted like one too, and he would yell all the time. He'd talk and this and that. Like,
very passionate,
like maybe too passionate. To be honest with you. And so like it's like life insurance. Like, how can someone be this passionate about life insurance? Like, when I say he loved what he did, he loved what he did.
Yep.
He'd bitch about it constantly. He complained about it constantly, but he loved it.
Oh yeah,
he loved going to work. And you remember Mike Smith?
Oh yeah.
So he worked next to Mike Smith. I remember when I took over like his book, Mike would just be like, "Man, Sheehan, I would dread when your dad was in the office, not because like I didn't like him. I liked him plenty. It's just like he was so loud
Yeah.
and I couldn't get any work done. He's like, so he had no like perception of like noise and this and that. He like laughed at this and that. I'm like, I was like, man, you should see him at the house, man.
Oh, I can only
So
imagine.
that's what it was. And so like, I like, again, saw that happening. And then, you know, when I went to college, you know, I the last thing I wanted to do was sell life insurance.
Yep.
To be really honest with you, I was like, man, I want to do anything else but that. You know, and so like, you know, I graduated, and you know, I graduated in 2009, man. And I don't know if younger people remember 2009. That was something called the housing crisis.
Yep.
And it was not a fun time to look for a job.
It was a rough time.
Yeah. Oh man.
I graduated in 2010, but I had an easy time getting a job because I became a life insurance agent. They're hiring,
right in.
yeah, they hire anybody.
Which I technically could have done that, but I was like, I don't want to do this. And so then like,
Yeah.
and I was also super arrogant too.
Oh yeah.
Man. I was like, oh, I got a college degree. I'll get a job, you know, back then paying like 50, 60 grand, which today is probably like 6-figure job. Right. And so I would go to these interviews. They would offer me like, you know, 45 grand. And I'd be like, I don't want that. I would deny it. And then a couple of months down the road, I went to Texas Tech. I was still living in Lubbock because I could not find a job.
Oh
And
man.
I was working like odd jobs. I was like bar backing. I was working at 24-hour fitness.
You're putting your degree to good use.
Exactly. Yeah. I'm like, this sucks, man. And so it got to the point reality kind of sipped in. I was like, man, I'll clean toilets at this point just to get a steady job.
Oh,
And
yeah.
So my dad kind of stepped in, you know, he saved his son, obviously. And he was like, hey, I have some connections. So he got me a job with this internet advertising firm, kind of worked there for a little bit. And then I initially then started work for a oil and gas company.
Really?
Yeah.
I didn't even know that.
Yeah, man. I tell people that all the time. They're like, I sell insurance, but before I was working in oil and gas, and I did marketing management for them.
Okay.
And so I was doing that for a long time, actually. And I was actually doing pretty well at it. And then back in 2015, unfortunately, my dad, he passed away.
Yeah.
And that was tough, man, because we just...
I can only imagine.
Yeah, we didn't see it coming. He was only 53. You know,
Very young.
Young guy. And yeah, we just kind of... It was very sudden. No one really saw it coming, right? So to kind of get to my point was that, you know, when he died, you know, his insurance book was just kind of there. And, you know, a decision had to be made. It's like, okay, do we just give it to someone in the firm? Or, you know, at the time, the guy who was running Penn Mutual, the Armor office, was saying like, well, hey, you can kind of come in. And I was like, man, I don't really have a lot of experience in this, man. I'll be real. I'll get laughed out of the room if I try to like do a policy review or try to sell someone a policy, because I don't know what I'm talking about, just to be frank. You know what I mean?
Right. Yeah. It's complicated.
Yeah. And so, luckily, my dad worked with a younger guy who was kind of like junior partner, and who's actually my partner still today. We have a great relationship. And so we kind of came together. He's like, hey, listen, I'm kind of, you know, for lack of a better term, kind of hold your hand while and we'll just do it together.
Yeah.
And I was like, you know what, let's just do it. You know, so I mean, it was kind of.
So you quit your job?
I quit my job. My job. Just was like, hey, let's just do it. It was kind of like I had to do a lot of like internal conversations, right? It was kind of like, okay, well, if I don't do it, I'll probably live in some regret here.
Yeah.
I'd always think about it and just be like, okay, man, what could have been? Man, would I've been good at it? And then I was like, if I do it, and if I just fall freaking flat on my face, I tried. You know, I tried and I gave everything I had, and I was like, you know, I'm going to do it. And man, it was rough because I was, like I said, even seeing it firsthand from my dad, but then actually being in it, like from, you know, getting the insurance license, from getting your securities license. And then you have to like meet all these clients, and, you know, the perception back then, everyone thought was like, oh man, these guys must be rolling in it because they got this massive book. And so they're fine. A lot of people don't know. Well, people probably listen to this, do you know, is that, hey, when you get paid on life insurance, you get paid one commission.
Oh, yeah. It's usually upfront.
It's upfront. Some people who want to, like, you know, they'll take a little trail here and there and get paid on like future stuff. But, you know, as you know, my dad, he wanted it all upfront. Like, so he got paid. So when we took the book, we were essentially serving this book for free.
Yep.
And so that was, people are like, well, you guys are just making so much hand of fist. I was like, no, not really. So, and the other challenging part was, you know, talking to my dad's clients. I mean, they knew me from when I was like
a baby.
Yeah. So now they see me talking to them, and they're like talking to me about life insurance.
Yeah.
And I'm supposed to be the advisor. And so like they're not taking me very seriously. They're kind of like small manning me, and I'm just like, oh my god, this is just not going well at all. So
That's brutal.
it was terrible, man. It really, but you know, it's one of those things that, like, you know, tough times don't last, tough people do.
Oh yeah.
I really believe that, and in a weird way, I kind of glad all that happened because it really just made me appreciate like where I am today, where me and my partner are today, and kind of what we've built. Because yeah, we didn't have it easy. We really had to like pay I call it paying school fees.
Yeah.
Because you're really like learning like what to do here from the ground up. And so yeah, we would do that. And
Well, in the upshot, I mean, like, yeah, people think of that as an advantage. Like, okay, I've got all these people to talk to, but in some cases, that's just service work, and you're not actually getting
you're doing it
ahead.
for free.
Yeah,
Yeah,
you're not like actually prospecting new people where you can.
no, you're not. And it's one of those things where it's like, okay, well, if you're not taking me seriously, you're clearly not going to refer me to somebody else.
That's a big challenge.
That's huge, right? And so,
So how did you overcome that?
yeah, that's a great question, right? So we realized, we was like, hey, we need to like kind of create our own client base here.
Mm-hmm.
Like, let's use the book we have, and let's use that to our advantage to maybe like spread out to like other like avenues, right?
Right.
We would like talk to current clients my dad had that were like our clients, and
Right.
hey, what about this young guy that's working for you? Let's talk to him, like the young up and coming guys.
Right.
Because at the end of the day, these guys are going to age out. They got to retire. They're either going to pass it on to their son or their understudy or daughter or whatever. Right?
Certainly. Yeah.
So it's like, hey, let's get in with these guys. And that's what we kind of did.
That's
And
really
then,
smart.
And
Yeah.
then we built trust with them. We kind of show them what we can do for them, and, you know, business planning, life insurance, term insurance. You know, we got into, my dad also had a very, very small like group health book.
Right.
And we saw that. I was like, hey, we can actually do something with this. I was like, this has not been taken advantage of. I was like, you have all these business owner clients who have companies with like 20 employees, 30 employees.
Untapped.
I was like, hey, let's get their group health. And that's what we started. And that's how we were able to like really grow the business, because you got to pay the bills. You got to like pay staff. You got to pay overhead.
Oh
You
yeah.
got to pay for like entertainment stuff, like this and that. Like that all, we were paying out of pocket for all that type of stuff.
Oh yeah. It adds up quick.
It adds up real quick. So I was like, hey, let's grow this. And then we built a book that I think we were only getting paid maybe like 25 grand a year on the group health. We've now exploded that to maybe like, you know, almost $500,000.
Wow.
We did. And we just, that comes to us every year, and we service that, and we look to grow that even more. But
so that's really like, if you think about it, the strategy that you just did is almost like the financial advisor that's doing investments, adding in the insurance, adding in the asset-based long-term care, adding in the annuity, whatever it is. You just said, you just kind of said, I've got this base of clients. We haven't tapped this. Let's add that in.
exactly. Yeah. I mean, I think the way I always kind of approach things is like, hey, listen, life insurance, we talked about this earlier. Life insurance is like the hardest thing to sell. We
were just talking about
If
it.
you look at the nuts and bolts of it, you don't see the benefit of it. Actually, I take it back. You won't see the benefit of it. You're dead.
Yeah.
It's called a death benefit for a reason.
Yeah.
You have to see the benefit to die. Now, there's ways to like design it and construct it to where like, hey, you can see value in this while you're still here, and you can take advantage of it while you're here, which that's why I like working with you guys, because we've tapped a lot of stuff that we can really do. Which,
well, especially what we're going to talk about today
yeah,
with the
later. Yeah. So, I mean, so to do that, that's hard. So when I talk to people, I'm like, hey, use this as like a branch for your overall portfolio.
Yep.
This is not going to like make you crazy rich. I will never tell a client, because it's not the truth. Like some advisors I've seen, not going to name names or people, but they're like, hey, if you do this, you'll get this, or, you know, you get this cash value, then this. I'm like, I'm not going to sell you a pipe dream, man. That's not true, because I want people to talk to me how I want to be talked to as well. It's like,
exactly.
hey, just keep it 100 with me. Just tell me the truth. What is this going to do for me? What can this not do for me? What can this do for me in the future? And I'll just lay it there. Sometimes it works, sometimes it doesn't, right? But you'll get to, it's like baseball. You know, if you're batting 300, you're in the Hall of Fame. Right?
You're doing well.
It's kind of like life insurance. You talk to like 100 clients. If you can sell 10 of those,
doing well.
You're not doing too bad.
Well, and then what an interesting point that you just made is, you're not going to get rich with insurance, and you shouldn't put all your eggs in that basket and that sort of thing. And I think that's a good strategy for talking to clients, because you don't want to overpromise. And in fact, if you underpromise, or you sorry about that, if you're realistic about it, you're more likely to get referrals and repeat
Yeah,
business
exactly. Yeah.
in the future. One of my mentors, I'd say in the business, Bill, he does this really well. He just tells it how it is. It's not going to make you rich. This is what it's going to
Yeah.
do. It's just a way to accumulate wealth.
Yeah, it just really is, and it's just one of those things where, sometimes you might not even sell that one person what they
Mm-hmm.
want, but I guarantee you they know somebody. I can't tell you how many times, like, I've approached a client or approached a prospect, and I told them what I can do and this and that, and they're like, "Hey, this sounds great. I'm just not there right now to do this,"
Right.
which is fine. Not everyone is, right? And so, but they'll literally be like, "Hey, I know this one guy though. I know this guy that owns like a thing of hotels. I
Yeah.
know this guy that owns like a franchisee of something.
You
I
should
know this
talk to
guy.
him.
You should talk to him, and I'll talk to them, and then we'll do something.
Yep.
And then down the line, when that person's ready to do something, we'll do it."
Yeah.
And so you got to kind of invest long term in people too.
You really do. I think you're totally right about that. And I think the challenge that a lot of people have in this business, especially if you have other lines of business, is they'll try to present a life insurance solution, and it's so complicated, and they get it wrong the first time and they fail, and then they're like, well, that didn't work, so I'll never do it again.
Yeah.
And I think that's a huge mistake.
Yeah, like I said, you got to be so mentally tough in this business, man, because you're gonna hear no way more times than you hear yes.
Yes.
That's just the truth, man. And so, yeah, just you got to stay persistent. Just believe in what you're doing. Tweak some things. Be open minded. That was one thing where I think I kind of maybe laughed at the beginning. I wasn't very open minded. I was like, okay, no, this is how we need to do it. We need to do it here. And even when we worked earlier,
Yeah.
I was like, hey, it needs to be like this. I was all about the commission, right? I was like,
Right.
yeah, I took a commission. Yeah. I'm grown up a little bit. Yeah.
We've all grown up, Sheehan.
And so where I'm just like, hey, no, there's other ways to kind of skin a cat too, right? And so
Yeah.
just be open-minded and be tough. And if you do those things, I think you'll be okay, man. I really do.
Yeah, I agree with you on that. So I think this actually goes right along with expanding the lines of business that you have. And I think that's a really smart way to put it. So we've done this a couple of times with some of your clients, but maybe explain or maybe give a brief overview of how some of your clients have leveraged the cash value that they've built up in their policies to invest in the real estate fund that you have, and I guess potentially other real estate investments that they have.
For sure. Yeah. So a couple of buddies a couple of years back, we created a fund just because we talked to a lot of people in real estate. I have a ton of clients in real estate myself.
I'm sure.
Hotel owners to people in construction companies.
Well, if you're working with business owners, a lot of them end up getting into real estate because they understand it.
They really do. I mean, end of the day, man, there's only so much land in the world you can buy, right?
Yeah.
It's kind of like a scarce entity.
Yeah.
You really think about it.
And
so, yeah.
And in my opinion, when you compare that to everything else that you can do, the only negative with it is the liquidity problem.
Yeah, that's an issue. Let's call it what it is, right?
That's an issue.
Yeah, it is, because I mean, you're gaining money, your net worth is high, but hey, if I needed $100,000, I can't like dig a hole in the dirt and be like, oh, here you go. Like, that doesn't really work that way.
No, you got to go to a bank, or you got to sell it, or you got to do whatever.
Which you can do, but it takes time.
It's not
exactly. It's not snap of the fingers, but people do it. And a lot of smart people do. I do it myself.
Exactly.
Right? And so, yeah, to answer your question, like, yeah, I have a lot of clients in that space. And I have a lot of buddies who work there. So we kind of created some funds, and we have opportunities for people to invest in real estate and things like that. And then I thought to myself, I was like, I have so many clients who have these cash value policies. Why not put this kind of together to where, like, hey, not everyone is always really liquid at certain times and things like that. But hey, you do have this bucket of money that is growing.
Oh yeah.
It's growing. Like, yeah. So it's like, hey, let's tap that and let's use those funds to invest in the real estate projects. Because if you think about it let's just break it down very simple.
Right.
I'm a big example guy. So
yeah.
I'm going to talk about a client that I'm not going to mention her name, obviously, but it was a real estate project that, she always had, she always had liquid funds, right? But a lot of her money was also tied overseas.
Right.
So, she'd have to bring it to the United States. That's not always the easiest thing, but she got it done, right? We don't need to know how, but
yeah. However,
she got it done. I'm not going to ask questions. So anyways, that was the thing. And then we had this real estate project that she wanted to invest in. I think this was about 3 years ago.
So she bought an insurance policy. She had been putting money into it.
Yeah, I guess to go back. So yeah, I would say about, oh gosh, like 8 years ago,
Yeah.
she bought, and we did this with you guys.
Yep.
Actually, is where the value is with you, is that she bought a hyper fund policy.
Right.
To where, it's like a 5-year commitment.
Yep.
They overstuff the policy, let the cash value grow. You have your death benefit on the side as well, but it's accumulated. It's all compounding cash.
Yep.
Which is a great thing. It's a great vehicle to have, and it's a great way just to store money.
Exactly.
And you can pull it out tax free.
Exactly.
And that's the big kicker there. You're pulling out funds. You're essentially borrowing your own money is what you're doing.
Yep.
And you're not paying any taxes. Why do you want to give more money to the government? There's no reason to.
Nobody does.
Yeah, exactly. So she had this policy the whole time, and she fully funded it. It's there to go. Right. Back to the real estate investment side of this.
So a couple, like 7-8 years ago, she built up this policy. She's got whatever it is, 500,000-600,000 in the policy.
I'm actually going to get to that because, she kind of just forgot she had the thing, which is a nice problem to have, right? Like,
I don't tend to forget about 500,000 or 600,000.
But, some people do, like, hey, and that's their prerogative, right? But so anyways, she wasn't able to get the funds to do this real estate investment because of turmoil overseas, and there was some political stuff happening on. So she could not get the money over.
And you were visiting with her about this fund that she has.
Exactly. Yeah. And she's like, I don't know what to do here. Like, I want to invest, but like, I don't have the liquid funds. I was like, time out. You have a hyper fund policy, correct? She's like, yeah. What about it? And I was like, okay, well, the reason we did this is so that you needed the death benefit because she also has 3 kids and this and that, whatever. But we also want the liquidity aspect of this as well.
Right.
And she's like, okay. So literally I pulled up her policy. This woman had like 600 grand in cash. And she only put, I think, 400,000.
Yeah.
I mean, that alone right there, right?
Oh yeah.
Yeah, exactly. So she's like, oh, okay, so how do we have to like cancel the policy? And I was like, heck no.
No.
No. Do not do that. Now you're triggering something like totally different.
Oh yeah.
I was like, no, what we're going to do, we're just going to borrow the 100K off this policy. At the time, your borrowing rate was only like 3%.
Yeah. If that was 2 or 3 years ago, it was probably around there, exactly. 3 or 4%.
Yeah. And so I'm like, okay, let's do this. The investment strategy at the time for this real estate investment, I don't want to get into like the nuts and bolts of it all, but just kind of the Cliff Notes version was, okay, hey, we invest, it's going into a construction project that should sell to like a REIT or something. And we're projecting her getting like a 40% return on her money, right?
Yeah.
Long story short, she does that whole strategy. We invest 100K. We took the loan out of her policy. She's still getting money compounded in the policy.
It's a great deal.
Making money there, right? The investment exits. This girl made 60 grand. She made 60% on her money.
Wow.
So she now has her initial investment of 100K.
Right.
And now a check for 60 grand.
Well, and furthermore, to further that, so she borrows the 100 grand. It costs her, let's just say $4,000 over that year.
Right.
But the 100,000 still stayed in the index of the policy.
Exactly.
And if I'm guessing that was around 2022, 2023. So I imagine it hit the cap.
Exactly.
At the cap, it was probably 9 or 10%. Mm-hmm. So not only did she make the 60,000 from the real estate fund,
she's making like a delta of 7%.
Yeah.
And that's what people like.
She made another 7 grand net in the policy.
Exactly. And I tell people all the time, I'm like, hey, even though you're investing money, you're still making money on the money that you borrowed.
I think,
and you can't, and like, I didn't mean to cut you off, but like, that's the beauty of this thing. Because a lot of people, when they want to invest in real estate or whatever, you want to invest in like Bitcoin, who cares?
Stock market.
Exactly. Yeah. They're going to take it from their money management account, right? I'm like, hey, that's not, I have money management accounts. I'm sure you do. Like everyone does. Great thing. Awesome. Like market goes up 50%. We're all having
fantastic.
Tariffs are on pause for 90 days. Everyone's happy, right? Markets goes crazy, whatever. But people don't realize is that, hey, when you take money from those accounts, they got to sell stock.
Taxes.
You're triggering a capital gains tax now right now. Because now you're subject for some type of capital gains. You're subject for having income coming into like your tax return for 2025 or whatever. So if she had to take 100 grand from a money management account, okay, they're going to classify that as income for you now.
Yep.
So you're not subject for capital gains, and you might, depending if you have a really bad CPA, you could be subject for like income tax on that too.
Yep.
So now you're getting hit from a lot of different ways. Like it's not a bad thing to do, but it's like, okay, hey, if we have a strategy to where we have a life insurance policy to where like, hey, you get the death benefit for all your beneficiaries and heirs. You
Yep.
get to pass down your wealth. You're preserving your wealth.
Oh yeah.
But guess what? While you're alive, let's stuff this thing, have it go straight to cash value. It's accumulating cash and it's liquid. That's the beauty
Exactly.
part of it, man. And that's
the key right there. The
100%,
liquidity.
because like that's how I can sell this to like clients. Is I'm like, hey, it's liquidity, man. I tell them that their ears just perk.
And
like the liquidity of it is just, it's massive.
And I think going back to the beginning where you were like, some people are positioning these types of products as a way to get rich. And really that's not the best way to position it, because the real value in it, especially with business owners, especially with high net worth people, because they can go invest in more exotic things and earn 60%, earn 40%. And it's not guaranteed, obviously, but the point of that is just simply to say it's more about the liquidity and the efficient use of the money rather than the returns.
Completely agree with you. It's positioning your money where you can leverage it and you're making money on your money.
Exactly.
If you look at any like 1% person or people who are in any type of like high net worth positions, any type of rich people think like, oh, Elon Musk, his net worth is $70 billion. People think he has $70 billion in the bank. He absolutely does not have $70 billion. No. That'd be awesome. I wish one day I could see that number in my bank account, right? But like, he doesn't. It's his net worth because he has real estate. He has
stock. He's got his equities. Yeah.
He could have a hyper fund policy that we sell, right? And that is that goes to your bottom line too. I tell people this all the time. This is an asset, man.
Yep.
This is not just like some policy you have like when you die, like you're it's like, no, it's an asset because it has cash in it.
Exactly.
So it's a way to like, you said it really well. It's not a way to get rich. It's a way to have your current income and net worth and leveraging the hell out of it. So you don't have to leverage your actual dollars.
Exactly.
That's what I think it is. And that's kind of what I tell people.
Yeah.
Because I mean, you hear that, it's like, okay, now this is interesting.
I agree completely. And there's a ton of examples. I like the real estate investing story or the real estate investing strategy because a lot of people are talking about it. A lot of people are doing it. I mean, like you said, your business owner clients.
Yeah.
I mean, for me personally, I obviously have these policies as well, and have built up really nice cash values. And when the market went down in 2020, I was able to borrow from the policies, invested in the stock market.
Yeah.
And not only did I, make out pretty well when the stock market came back, but I also hit the caps on the money that was in the policy.
You're hitting both sides of it, man. That's the beauty part of it.
Exactly.
Like you're taking advantage of every aspect of it.
And
the cost of it is so minimal.
Exactly.
It really is, And now I'll tell you this, there's some people who just like don't get it too.
No.
You get those type of people and that's fine. I always just tell them real life examples. Like everything I sell, I have on my own. Like I have like a big IUL, term. I got a hyperfund policy, like all this type of stuff.
Yeah.
So I can't show them other clients. I just show them mine.
Yeah.
I'm like, this is mine, dude. Like, hey, here you go. Like,
there's real life.
I'm not just like bullshitting you. Like, I'm actually like, I believe what we're doing here. And
well,
that's what it is. Like, yeah. And
that is another piece of advice for advisors out there. What's funny? We were just talking. Sheehan and I, we did he was at our lunch and learn the other day about asset-based long-term care. And we were talking and we're both, I'm late 30s. Sheehan's about the same. And we were talking, I don't know that we would buy that for ourselves. I can't see the value. I mean, for an older person, I can see the value, but
yeah, it's one of those things. Is like, if I talk to clients how I want to be talked to, right? So some guy came up to me, he was like, hey, put 100K in this. When you're 65, 60, you pull the trigger. I'll be like, man, get the heck out of here, man. What are you talking about? You know what I mean? But like I said, but that is important too. Like
it's very important.
It's very important. We're talking about that, but end of the day, your client has to see the value in it.
Agreed.
If they don't see the value in it, there's only so much you can talk a client into seeing the value.
Agreed.
At a certain point, if they don't see it, then you're just wasting your breath.
No, I agree completely. And I love the strategy that we've talked about today of a parking place for capital to be deployed in the future. And I think
Exactly.
that's the best way to put it.
I even tell people all the time too. It's like, this is a really kind of weird analogy, but I'm like, hey, even when I saw annuities too,
Yeah.
I'm like, hey, keep in mind, especially on these business owners, they're subject to a ton of liability, man.
Yep.
And in today's society, people get sued like
For no reason.
if I looked at you the wrong way, you could sue.
Oh yeah.
And that's just what it is, right? So I'm like, hey, it also like saves you from predators.
Yep.
It saves you from people coming after your stuff. And I use the example all the time, OJ Simpson, man.
Yep.
The guy got found guilty for the civil case, had to pay like what, 14 million bucks.
Yep.
He paid out nothing because all his stuff was locked up in annuities and life insurance.
Yeah.
So whoever his business guy was at the time deserves some like freaking medal or something. Like I was like, that's just yeah, because they couldn't touch it.
I know.
It's almost
That's
like,
a really good example. I always
well,
forget about that.
Another one I always say is I hope this is not inappropriate, but like I tell like how people who work in shady businesses, right? All cash business.
Yep.
If they think they're going to jail, what they do? They go to the desert and they bury all their cash in the sand, right? You need to think about that as like an annuity or life insurance because God forbid something happens to you, if you get sued or something, hey, that's your safe money.
Totally.
Yeah.
Totally creditor. I actually have a funny story about that. My wife and I, when we worked together on this case because she was in the business.
I keep forgetting your wife was a
yeah.
Did she miss the business at all?
That's a good question.
I know she's an awesome mom.
Yeah, she is a great mom. I think I don't know. I'll have to ask her.
I'd be curious.
I think she really enjoyed it. She was really good. She's a better salesperson than I am. Yeah, she's more like maybe I will have her on the show and ask her.
My business partner, so we also like divert. We bought like a logistics company too. He does more of that now.
Yeah.
And he's like, man, Sheehan, there's not a day I don't miss life insurance. He's just like he's all about.
But I could see that he's probably more on that side of things. That makes sense.
He's very good at it. He's
more
like,
operational.
Exactly. He wants to talk to like people, this and that. I'm like, and I do a little bit with him too, but I'll just do this.
Have fun.
Yeah. Exactly. Yeah.
So I totally lost my train of thought. Well, oh yeah, so we were working this case. So she got brought in and she brought me in as well. It was a big opportunity to put a lot of money into life insurance from a business owner. Yeah. And so we're giving him a presentation. He's like glazed over. And then I bring up the fact that it's creditor protected. He's like, wait a minute, it's creditor protected? Yeah. So he's like, well, I'll put, $1 million into that thing. And so we go back, we do the proposals, and we're trying to get back out to see him, to see him. Well, like between the time that we saw him the first time and the time we talked to the referral source, I guess his business got raided by like Medicare or something like that. He's doing Medicare fraud. I don't know what it was.
So the analogy is happening.
Yeah.
See that, but hey, it could. That's
exactly. It was kind of funny.
Wow. What? So do you guys still keep in touch?
I haven't talked to the guy, and so I don't know what he's up to, but he might be in jail. Who knows? I have no idea.
Well, his cash is safe.
Yeah. Well, no. Well, he never did the policy. So.
Oh, he didn't?
No.
See, there you go. Missed out, man.
It was too late.
I bet he was like calling you in the cops. Hey, what do I need to sign?
It was way too late.
The 1035 goes.